All right, hello everyone, and welcome back to the daily update of my 1000 day challenge. This is day 185. So as you can see, the equity has dropped even a little bit further. So it's now down to 12,924. So we've down around 300-ish, and reason being is both the experimental trade took a loss. Took three losses actually, and then on the other hand, the main trading account also take one loss. So I would say it's around 300. So yeah, so that adds up to around 250 in that sense. So yeah, so that's something to bear in mind. So overall, the equity curve is still sloping towards the upside, so I'm not worrying in terms of the long term or whether the strategy is not playing out. So this is the drawdown period that the trader do have to take note of as well. All right, and other than that, let's cover in terms of the main market structure update for the month and also weekly, because it just go inside in terms of the 1st of February today. So as you can see, actually updated, I realized that all of this has been misaligned in the sense of the strength of the trend, because on the monthly chart we only do see the 20 and the 50 simple moving average, 20 exponential and 50 simple. So that doesn't form so-called a strength of the trend that clearly. So once again, if you are new to this channel, when I define as a strength of a trend as in strong, this means that the 50, the 20 exponential, the 50 simple moving average, 150 and 200 are all aligned correctly in that sense. So that's something to bear in mind. And yeah, otherwise, the market structure on the monthly chart still remains the same. As you can see, I've updated it. On the other hand, on the weekly chart, similarly, it's also the same. You can see S&P 500 remains neutral, neutral. ASH also remains neutral and neutral. And the main change, I guess, could potentially come from the daily, but yeah, actually daily looks the same as well. But do bear in mind that I do see, even though the market structure wise has not changed across the board from both weekly, monthly, and even daily, but more importantly, on the daily chart, you will see that there is bearish momentum in terms of a single price action candlestick itself. So market structure is yet to change. But if you do look in terms of the weekly chart, this is one very, very bad bearish engulfing candlestick on the weekly chart for the S&P 500, especially when it happened in the top. So this itself is definitely a bearish line that potentially we could have some sort of retracement or pullback in that sense. So over here, you can see there was a bearish kind of candlestick, strong after uptrend. Then we have some sort of retracement and pullback. So potentially we could retest this 20 exponential moving average, or in my opinion, preferably even near this. So actually, I'll just remove these. Like what I mentioned, I do not like to use slope trend line unnecessarily, but this one could still remain valid. If we do break over here, the 20 exponential, we could find support over here at this 50 simple moving, this upslope trend line, and also I would say this horizontal daily support candle as well. So that's something to bear in mind. And on the other hand, for KWEB, for Nasdaq, we also have somewhat like a bearish engulfing candlestick on the weekly chart as well. So these are a little bit of a, I wouldn't say worrying sign for long term, but I would say it's a short-term bearish momentum shift in that sense. So let's see how price react to it. And similarly for ASH, we also have a bearish engulfing candlestick. So the only one that you wouldn't see with this is, yeah. So similarly on the KWEB itself, you almost form a bearish engulfing candlestick, but it didn't fully engulf. So if it does follow the trend of the remaining market, then we could do definitely retrace, and it could potentially come near the 20 exponential moving average region, which would be a great place for me to add as well. And yeah, and finally, in terms of Bitcoin wise, okay, so in the monthly chart, we do see potential rejection similar to this candlestick you see, this candlestick you see. So what is key is that this month we have to break towards to higher high. Like for example, here we got the bearish, and over here we got a run up, we got a bearish, and then we continue bearish, continue. So as long as this month still remains bullish and close in a green candlestick, then I will be definitely bullish still. However, if we does close with a red candlestick, then the following month we do fall below, then I'll be very worried in that sense in terms of short-term momentum that we could definitely retest to find support at this 20 exponential moving average. So here you can see when it's found support, it failed, tested, 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 didn't rebound strong enough, and then we break below it. So there's where potentially I could choose to take profit, which, as you can see, wouldn't be a very good place to take profit. But otherwise, if you're considering that you have entry over somewhere along here and profit taking over here, there will be a very good and decent risk to reward setup as well. So that's something to bear in mind when it comes to trend following. You would definitely not be able to ride to the end of the trend, but rather to say you will be able to ride the bulk of it in that sense. All right, and finally, in terms of the weekly chart, let's move over to the weekly chart before we go to daily. Weekly wise, we do see some sort of indecision candlestick. So potentially after 2 weeks of closing bearishly, we close with somewhat indecision, which could spark a reversal in terms of trend. But let's see how things goes, and especially also with the 20 exponential moving average catching up upon, which similarly is a great sign as well. And finally, we have this 50 simple moving average. Even though we close below, I would say that as long as our price is above the 50 simple moving average on the daily chart, I'm leaning towards a further upside break. So the issue is they don't break up decisively. So I would disregard this downslope trend line, even though I've drawn it conservatively. But as long as it's been choppy around that trend line that I've drawn, then I'll remove it because it doesn't sort of play a significant role. Most likely isn't playing a significant role as well in terms of the algorithm traders or even the systematic trader and stuff like that. So that's something to bear in mind. So for me right now, in terms of 4-hour chart, if you do look at me, I'm not entering into any trade because on the 4-hour chart, it looks really choppy in between the 200 simple moving average and below the below the 150 simple moving average and the 200 simple moving average, but somewhat choppy going up and below. So for right now, I'm definitely staying away from the trade, but if we do see support over here, then there'll be a great sign. But on the other hand, if we do fall below, then definitely there'll be a very bad and bearish sign in that sense. So potentially you could look for short-term short setup. But for me right now, I'm staying outside of trade in terms of price action-wise, because overall on the daily chart, we're still looking towards bullish side. So I'm not looking to enter a short setup as for now. Otherwise, that's more or less about it. I think today's session is a little bit long due to the monthly update and weekly update involved. Otherwise, that's more or less about it. And I'll see you guys tomorrow. Take care. Bye-bye.